The next 36 hours for crypto are going to be extremely important to start painting a picture of what the rest of this year is going to look like. And no, I'm not doing the stereotypical you have 24 hours, you have 12 hours, you have 10 hours clickbait. No, you actually need to pay attention to what happens over the next 36 hours because it is going to be extremely important. And what happens within these 36 hours, as I mentioned before, is really going to shape the way that this month, this quarter, even this year starts to play out. Now, over the next 36 hours, we are going to see the commencement and basically the completion of the FOMC meeting. Now, if you're not in the United States, what the FOMC meeting is when a big organization called the Fed, who controls monetary policy or just economic policies, right? They meet up and they discuss the economy. They say, okay, where are we at? How are things looking? They go through all the reports, jobs reports, unemployment reports, and much more to determine if they're satisfied with where the economy is at or not. If they are satisfied with it, they won't do anything. They won't cut rates. They won't do anything. They'll just leave it alone. If they're not satisfied with the economy, they'll discuss why. Is it too high or is it too low? Now, say, for example, if the economy is doing too good, right? And as a result of it doing too good, inflation is absolutely flying. They may need to constrain the economy a little bit. They'll raise interest rates, make money a little bit harder to get, which will, of course, constrain that overall amount of liquidity in the market. If they think the economy is a little bit too low, maybe they're not so satisfied with where things are and they need it to get a little bit better. Maybe things are lagging behind. Maybe people aren't doing so well, then they'll lower interest rates, and there's other things they can do, but the interest rates are what matter for crypto, right? They'll lower interest rates, which will make money cheaper. And generally speaking, that means more people can access it. And when more people can access it, more people will spend it, which typically will inject its way back into the economy. But obviously, you have to be careful because that can trigger inflation. So, with that in mind, over the next 36 hours, they're going to be determining and deciding how they feel about the economy and what they're going to do. Now, the reason that this impacts crypto so much is quite simply because crypto has a history of performing good and very good in periods in which interest rates are coming down. This is called quantitative easing. And it means that they're, again, making the economy have more liquidity in it. And oftentimes that liquidity does float into crypto. Now, you may be wondering, well, Tyler, we've had many FOMC meetings. Why is this one so important? Well, the reason this one is so important that I'm actually making a video for it specifically is because this is the very first FOMC meeting post major catalyst season, right? In 2024, we had the halving, we had ETFs, we had Trump's election, we had Trump's inauguration. We had all of these things going on that were injecting value into the world of crypto. But now that Trump has been inaugurated, there's not much of that left. Obviously, there is the idea that a Bitcoin strategic reserve could be introduced. At any given point, a major company could start buying Bitcoin. All of those things could happen, but those are all a bunch of coulds. Those things that we saw last year were for sure going to possibly happen, right? And so as a result of that, we were in a major catalyst season to where even if the FOMC meetings went sour, right? They went south, they weren't going to have a gigantic impact on crypto if something like an ETF launched, right? But now, this year, again, we're post catalyst season. We're going into that second year. And the second year is always, always, always somewhat dependent on unexpected catalysts and the economy, right? Think back to 2021. You have unexpected catalysts, of course, such as Tesla coming out and buying Bitcoin almost out of nowhere, El Salvador turning Bitcoin into a legal tender, and then obviously you have your economic things, right? Quantitative easing was at an all-time high. Inflation started to creep up, but the economy was doing okay because they were just printing money and giving it to everyone, and it was finding its way into crypto, right? We're into the 2021-esque type of year. And so now in 2025, we are going to see this market heavily dependent to some degree on what happens with things like the economy, right? If the economy starts performing and it starts doing like, okay, maybe it stays stagnant to some degree. It's not absolutely flying, but it is staying stagnant. And then the Fed decides, hey, you know what? We're kind of good. We think that we're in a pretty good spot. Inflation's under control. I think that we're able to actually go in and maybe pull some of these interest rates back, make things a little bit easier on the everyday person, make mortgages a little more accessible, right? That could actually boost the economy. And maybe they'll take the constraints off to help the economy start growing. That's possible. And you know what? If that happens, that's very good for crypto. Because if they go in and start lowering those interest rates this year, it is going to put the world of crypto in a spot in which more liquidity is slowly trickling and finding its way into Bitcoin, altcoins, meme coins, and things like that. Now, so with that in mind, it's very important that going into the rest of this year, we watch this very closely. Now, what I will say is that expectations are that tomorrow they're not going to do anything. They're not going to raise interest rates. They're not going to lower interest rates. And the reason being is because they're not particularly worried about the economy right now. They don't think we're in such a terrible spot that everybody's going to, of course, just die if we don't, lower interest rates. But they're not super satisfied quite yet. Now, the reason why they're not super satisfied quite yet is because something like inflation is still being a little sticky. It's giving them a little bit of an issue. And as a result of inflation giving them an issue, obviously they don't want to go in and really make a whole bunch of changes, right? They don't particularly want to go in and start lowering interest rates because that could cause inflation to actually start going back up, which is going to give them a worse problem. But they obviously don't want to go in and raise interest rates because the economy is in an okay place right now. So they don't want to ruin that, right? Now, obviously we did get jobs report coming in, and that was pretty decent. Obviously we got PPI coming in, that was obviously pretty decent. So the economy's in a bit of a balance right now, and so as a result they're probably not going to do much. And until they start to see inflation start slowly trickling its way back down to some of those target numbers like 2%, you shouldn't really expect them to start getting super dovish and start going in and lowering interest rates and trying to boost this economy up, because the economy doesn't particularly need it right now, but it could use it. So it's just kind of in a weird spot. I think they want to get this economy in a really good place, but at the same time, they don't want inflation to just take off. And so it's a delicate balance. And I don't think that they're going to go in and start making a bunch of changes, especially in a time where inflation's kind of giving them problems, but the economy's like, okay, right? So that's that balance. So right now, I believe the market has priced in nothing happening. And so if nothing happens, I think we may get a little bit of volatility. I think some emotional retail investors may get caught in some sort of bullish and bearish traps. But at the end of the day, I don't expect actually that much to happen in the world of crypto. Again, maybe a little bit of volatility to start liquidating people. I think maybe the lizard people do step in and try to use the FOMC's emotions and sentiment, no matter what that sentiment is, to create some volatility to liquidate people. That wouldn't surprise me. And so I am still not opening up huge leverage trades or anything like that, but I'm not actually expecting much. Now, if they come in lower interest rates, I do actually expect that the market will do very, very well. I think that we're going to see the prices start really giving us a good push. And then, of course, if it does start to give us that good push, I expect that liquidations will really climb. And the reason I say that is, of course, if we just go over here and actually we go look at what's going on with liquidation data, right? You can see, you can see it. If we go out to say something like the 30-day, for example, you can see there are currently $2.87 billion worth of liquidations to the top side just here on the 30-day. And if you see it across all of them, it's actually a little bit higher. It actually climbs all the way up to $6 billion worth of liquidations across all exchanges if this market goes up. And of course, there are about $7 billion in liquidations if this market goes down. And so my general thought process here is that if they raise interest rates for some godforsaken reason, we're going to liquidate all of these people. If they lower interest rates, we're probably going to liquidate all these people. And so my general thought process here is that the market would actually react exactly as you would expect to what they do tomorrow. If nothing happens, I don't expect that much to happen in crypto. I think maybe we get a little bit of volatility because if we go to the 1 day, for example, there are a couple $1 billion worth of liquidations around 97,000 and a couple billion around 105,000. And I think we're probably going to end up taking out both sides of this at some point. Bitcoin giving us some sort of weird move, right? Some sort of like bing bang, some like bing bang, right? Something like that wouldn't shock me to start liquidating everybody who's somewhat around this liquidation level. But again, I don't expect that much to actually happen. I don't think that if they just keep interest rates the same, that that's going to be some sort of catalyst to just, send us out of this HMZ, this high manipulation zone that we've been in for a while. So you need to be on the lookout for it, because again, what does happen tomorrow and the tone that they have tomorrow and the things that they imply about tomorrow is going to start getting priced into this market. And it's really going to cause some movements, and we just need to watch it. And so I'm going to obviously make a video about this tomorrow, but I wanted to warn you in advance today so that you're prepared for tomorrow. So my current strategy still remains the same. I'm not doing anything. I'm not buying. I'm not selling. I'm literally doing nothing right now. I'm just going to sit back, wait, watch, and let this happen exactly like I've been saying. Now, I will let you all know, just because I'm not currently doing anything right now, it doesn't mean that there are not options and opportunities out there. And that is something that I wanted to talk to you guys about really quickly, because I feel like I have a tendency of, like somewhat encouraging or influencing people to follow in my tracks. And I feel like there can be a little bit of that can be a little problematic, because some people say, Tyler, like, when are we going to start trading in? When are we going to start trading in? And I just want you all to understand is just because I'm not leverage trading right now doesn't mean that it's a terrible time to leverage trade. I mean, we're in a range, and some people do range bound trading all day. I'm just very busy, and I have a lot of things going on, and we're obviously traveling, and I'm launching, the V2 of the school on February 1st and the agency. There's a lot going on, right? So just because I don't have time to leverage trade right now doesn't mean that leverage trading is a bad idea. And so I will let you know, don't feel like you just can't do things just because I'm not. That doesn't make a lot of sense. sense, and you shouldn't base your strategies off me like that. And so with that in mind, I do have two things for you that I do want to mention to you. Of course, you guys know I got to shamelessly shill here, got a business to run, dang it. The first thing I want to talk to you all about is the fact that if you do want to trade, and if you do, of course, want to get some bonuses going and stuff like that, you can get up to $20,000 with my WEEX link down in the description below. When you do things, for example, such as just signing up and securing your account, they're giving you $50. If you want to KYC, they'll give you another $10. If you start doing some trading, they're going to give you $10, $20, $50, $200, $2,000, $5,000. I mean, absolutely insane bonuses, and that's all through that WEEX link down in the description below. And finally, if you do want to get some trading going, and if you want to join a community of people who's absolutely smashing it, printing 70%, 60%, 80, 200, 130%, 300% over and over and over again, feel free to check out the link to the school down below. Guys, if you do want to check out the link to the school, what you can see here is that in our school, we have one very simple task. We take crypto investors like yourselves, we give you courses, coaching classes, live streams, workshops, signals, research, Q&As, and much more to help you refine your strategies, because strategies are where the gains are made, and that's why our community performs so well. We currently have over 1,235 paid members in the community right now, and the best part about it is you can sign up for as little as $5 a month. So go to the link down in the description below, go check that out, let me know what you think, and again, do not forget to watch so closely what happens tomorrow, because guys, when I tell you it's going to be much more important now than it's been over the last year or so, I'm telling you, you'll see exactly what I mean. And so with that in mind, of course, I hope you guys have been enjoying these videos, and I can't wait to see you all in the next one. Peace out, everybody.